Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and I'll be breaking down today's market price action. It's a Thursday, January 23rd. Let's get into it. As always, we'll be breaking down today's market price action by looking at broader market analysis. Then we'll take a look at sector heat map, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at market analysis, let's just jump right into the headlines and the numbers. And looking at the headlines today, we actually have a breakout to the new all-time highs on the S&P 500. So you can see that broader markets overall is bullish. And we can see that in the numbers today as Dow Jones is up 0.98%, S&P 0.53, Q's up 0.21%. The small caps up as well. And here we are in a sixth day of decline in the US oil. And gold is staying strong as well. So as you can see that this was a broad market rally here. And you can see that in the advanced decline ratio here, 60% to the upside, 36% to the downside. But overall, the biggest improvement that we've seen is in this market breadth, 52% on the upside, above the 50 moving average, and 48 to the down. So we definitely seen a big shift in the markets here. As you can see that in the chart, I was definitely doubting that we probably paused a little bit off that resistance level. And here we are breaking out in the all-time highs. So quite a recovery where we were at the bottom. And here we are at the resistance. So overall, again, we haven't really seen any tariffs. Overall market is in a good mood. Market sentiment is bullish. So I think this is where we have to leave our opinion on the side and just trade the market in front of us. And that market right now is bullish. If you take a look at the NASDAQ, we are getting to the highs, haven't broken out yet. And then here we are with the small caps, definitely has a lot more room to run. But again, did recover a little bit today. So overall, definitely S&P is the leading here. And here we are with the heat map. As you can see that this is a lot more green across the board. This is, again, the rally is broadening. So, it's just not the Amazon or the Apple or the Nvidia or Microsoft. You're seeing a lot of the other sections that are looking green here. That's looking green over here. Now, if you go with the market outlook, again, we are still at +2. Markets, again, I think at this point, based on today's market close, it does look more bullish. So I think we want to be more on the bullish side, but at the same time, just keep a close eye on the relative strength and weakness and have a balanced approach. So I have some, some longs and some shorts and one sideways play. Let's just start with the bullish one here. DoorDash. Again, I'm looking for things that are going or giving us a breakout signal. Here we are with the DoorDash. Got a nice little breakout signal here. You can see that we spent sideways price action here for more than a month and a half. So here we are breaking into two highs here. So I do like a further a bull call spread on this one. And then here we go with the second one, John Deere. You can see that this thing had a big sort of pullback. And then here we are breaking out to the highs here. So this is another one goes in the books here, getting a nice breakout pattern here. Now, the last one, again, is the Roblox. You can see that this thing was sideways for quite a while. It did break out, and again, a nice bullish candle today. So this thing continues to be outperforming here, regardless of what's happening in the markets overall. It's holding a lot better. Now, here we are with the sideways play is the Micron. You can see that this thing is just stuck in that range here. So depending on your strategy, I think this is a safer play to just trade that range. Now let's go over the weakness. Here's the first one. I did have this one on, I think, the last recap where this is the Intuit. And you can see that this thing is continues to underperform here. So same thing, markets are broadening, the rally's broadening, but this thing is not taking part in that. So this is, again, giving us a green signal here to the short. Now, the other one here is LVS, Las Vegas Sands, and you can see that, breaking down lower off the little bear rally. We did have a big sell-off here, a little bear rally here, and selling off here. So again, just underperformance here, regardless of the broader market rally here. And the last one, again, not ready to roll yet, but again, looks like a nice bear rally pattern, made a lower low, made a lower high. And again, this one, I might just jump on it early, just, playing for that bearishness down to the 176 area and ultimate break of that area. So these are the ones, again, I'm paying attention to. Overall, back to bullish. Until or unless, remember, we are in this Trump era now where headlines is going to move the markets one way or the other. So be prepared for that. This is where have a balanced approach. Look at the outperformers, balance it out with the underperformers. I think that's just the way to play right now. We have the the manufacturing and services PMI tomorrow, but that's pretty much it. Outside of that, we got some earnings report from AXP, American Express, Verizon. So those are the ones to pay attention to. But overall, we're happy to see that we're getting a direction in the markets, which it was hard to kind of follow in the last 2 weeks. So time to get on the long side and just keep a close eye on the news and the headlines as well. Thanks everyone for joining. See you the next one. Happy trading.